Between ambition and execution lies the true test of European hydrogen future. As Chief Policy and Market Officer of Hydrogen Europe, Daniel Fraile stands at the intersection of translating industry ambition and regulatory design. At this critical juncture, Daniel's role is central in steering the conversation between policymakers, investors, and the whole hydrogen value chain. Daniel, it's a pleasure to have you here with us at the Connecting Hydrogen Europe 2025.
Thank you for the invitation.
To kickstart today's interview, I want to raise with a big question. How do you do this? Policy and markets are two big different things. How do you navigate and translate between these two words effectively as Chief Policy and Market Officer of Hydrogen Europe?
Yeah, thanks for the question. It's very, very interesting. Well, first of all, we are Hydrogen Europe. We are an association. We represent more than 620 entities, most of them companies, but also local government, national association. So it's a very large ecosystem with all players in the value chain, from technology providers, hydrogen producers, hydrogen transport operators, consumers. Consumers are in the steel industry, automotive industry, fertilizers. So it's a very, very rich and diverse ecosystem. And so my role is, on the one hand, talk to the industry, talk to our members, understand what are their projects, their challenges, their pain points. Also, how do they see the opportunities? How do they see the technology evolving? Translating all that, which is sometimes complex, into a simplified set of messages that I can translate into the policymakers, right? The policymakers need to have very crisp, sharp, concrete ideas on how to turn, regulation, incentives into something just useful for the industry to drive investments. On the other hand, I also need to talk to the policymakers together with, obviously, with my colleagues, understand what they are their concerns, what is important for them in that particular moment, what is relevant in the political conversation or in the policy discussion. Take that and also bring it to the industry and to explain them, well, is this the right time to raise these issues? Should we wait until there will be another conversation where we will have more interest from them to hear about our proposal? So that's the job of the association, and that's part also of my work in the day-to-day.
Yes, the two parties need a lot of communications, but there are still misconceptions. What are the core market needs that policymakers most need to understand? And conversely, what political or structural realities does the industry often overlook?
So let's start first with the market needs. In Europe, renewable hydrogen, RFMBO, as we know it, is the name of the game. Most of the RFMBOs, the renewable hydrogen, will have to be produced by long-term contracts, PPAs, and those, are long-term contracts between the renewable producer and the hydrogen producer. The conditions oblige you to have a temporal correlation, right? So it is extremely important for the policymaker to understand that how those PPAs, those power purchase agreements, are structured. How, as a hydrogen producer, I will have to sign a 10, 15 years contract with the renewable energy producer. How I'm going to behave, for instance, if I sign a PPA at the 70 euros, 60 euros, what will I do when the market prices are 300 euros, but my power installation is producing? I have to do this temporal correlation. So should I produce the hydrogen, or should I actually keep that power and bring it back to the market, right? So understanding that type of structuring of the contracts, how flexible or firm those contracts are, is extremely important, because at the moment, the legislation is designed in a way which ignores many of these market dynamics. Another, I think, example which is important is to go into a long-term, or to go into a hydrogen production project, you need to ensure the long-term contracting of the off-taker, of the consumer. And normally you will be expecting 10, 15 years of commitment to buy that hydrogen. This is very challenging, especially for potential users. Today we have hydrogen, let's say conventional hydrogen users, which operate in a global market. And so this is a commodity. They use natural gas for producing hydrogen. We are telling them to replace them by green hydrogen. They will have to do that at a different price in a global environment. And they might be subjected to competition. So how do I guarantee that they can engage for 15 years buying a more expensive product without maintaining that competition? So we need to develop support mechanisms. We need to develop guarantees also that the bank can chip in. And I think The policymaker doesn't really know yet very well how to support that. Conversely, you also ask me what is the industry needs to know about the policymakers. Uh, we push a lot for decarbonization. That's great, and but sometimes there are other important dynamics like geopolitics or industrial policy. And I think sometimes we forget that those have a huge value as well on the conversation for the policymakers' perspective. We need to bring all that together, and that's what I also need to do into explaining to our industry members.
Today, large-scale hydrogen deployment still faces a structural challenge, which we call it chicken and egg. Supply-side investment is constrained by uncertain demand, while demand side remains hesitant due to the insufficient supply and lack of scale. From your perspective, what are the most effective tools to unlock this, and what action is Hydrogen Europe taking?
I think the Renewable Energy Directive is a core piece of the European legislation. We have the RED 3 now, as we call it, in Brussels. That sets binding targets for the fuel suppliers in the transport sector. So now I'm talking about transport. It's effective, even though it has not been transposed yet at all country levels. We are coming from a experience from the previous directive where a market for fuels in transport has been created. So there is experience about um, trading certificates for emission quotas, so for blending quotas of renewable fuels. And so here, hydrogen comes in also with its own obligations of 1% minimum. It can go higher. Some countries are proposing higher. And that's been very effective. Already we see a number of investments from big refinery companies because they expect these quotas to apply, and they have a penalty if they don't comply with. So this is being effective. Another one, which I think is also very, very promising, is the Refuel EU Aviation. Here again, in aviation, this is different. It's a regulation. So applies equally to all countries, to all companies in Europe. I think it's a much better way of doing policy. And here there is a clear target and obligation for the fuel suppliers, and also an obligation for the off-takers to uptake these, say, sustainable aviation fuels, including synthetic. There, I think it's also going to be working very nicely because there is a very clear, very predictable market space. The missing piece still is how we take green hydrogen and low carbon hydrogen into the industrial sector. So I talk about renewable directive for transport, effective. It's not the same for industry. It's not being effective. Here, I think we need to work on also forcing the industry to uptake this hydrogen, but only when we give them the tools to do so, yeah, in an economically sustainable way. So we need to work also on those enabling conditions. One of those enabling conditions is availability of infrastructure. Today, we don't have a hydrogen infrastructure. We don't, even if we want to produce hydrogen, we need to do it at the demand side because we don't have a network of pipelines. So that we need to work very hard on that, as well as on access to storage sites. Pipelines are important, storage sites are equally important. Second thing, we need to also support economically to the prices. Prices are still more expensive than they could be in the long term. So we need to help decreasing the risk of the technology. So I think these are, and maybe a third one is about giving flexibility to the industry. So you impose them targets, impose them some obligations with a penalty they don't achieve that, but you also need to give flexibility in the terms how they reach those obligations. They need to create a market for certificates, so this can be traded. You can enable new players to come, to do the investments and do it in the most economically efficient way. So all these enabling conditions are important. If we have them in place, we can also push the industry an extra mile.
As you just mentioned, for the industry to success, we need a whole ecosystem. And that depends not only on major players, but also infrastructure operators, SMEs, innovators, etc. Are current rules and funding frameworks friendly enough for example, SMEs?
That's a very important topic. I think the answer is no. It's not SME friendly. And that we can see because the largest investment which are taking place there in hydrogen are by the very large energy, oil and gas companies, right? I think there is a number of things that we need to work. First of all, the funding framework, which is still very needed, is very complex. It's very complex. So to access funding, it requires a high level of investment a priori to develop your proposals, to prepare them to be able to be competitive. I think the second thing is that it's a very fragmented market, especially I'm talking about Europe, but even globally, right? So for small companies who grow in one specific market, moving to other markets, it's very challenging because the taxation regime is different, insolvency rules are different, all sorts of regulations are different, and that is a huge barrier for innovative companies. For SMEs, we said that there are two death of valleys of death. Sorry, one is from the lab to the pilot. You know, you need to make a lot of innovation to get to your pilot. The second one is from the pilot to the mass scale. Here again, we need to have more funding instruments, which today we are lacking, to support with equity on the large stage of the development of the project. You know, we are good on the R&I, we are good at the market placing, but we are not good at helping projects at the last stages of the innovation. And I think we can do a lot better on that front. That will help a lot the SMEs. What you say is extremely important in developing a hydrogen ecosystem.
And the last question to wrap up today's interview is about what's next. In the next 3 to 5 years, what do you see as the single most important policy signals or market milestone that could unlock exponential growth for European hydrogen economy?
Well, I think that's what we always working, myself and the whole association and many other players around the community, is to have a single long-term narrative and strategy for the energy transition. Today, we are lacking a common narrative. So you have this debate about the electrons versus the molecules. Those who say, well, we need to electrify everything, to those who say, well, not everything can be electrified. And there is a whole discussion where the money should be put, where the price should be put. And I think this is basically a bad recipe, right? We need to align that vision. In the long term, electrification is super important. We're going to electrify a lot of our energy uses, but not more than 50% by 2050. The other is molecule. So it's very important that we work also on decarbonizing that molecule and ensuring that that molecule helps also integrating the variable renewables, electricity system, and so on. So that's super important. The second point, it's also the one about whether Europe on its own can manage the decarbonization, or we will continue depending on other partners globally. Of course, as we reduce our dependence on fossil fuels, that makes Europe stronger on its autonomy. But it will also make us strong if we can diversify our energy inputs. And Europe will not be able to source all its energy on its own from renewables. So importing renewable had from, Patagonia, for instance, from Australia, from Africa and Canada, from India. This is very relevant. And hydrogen can be a very strong partner on bringing that renewable. So we need to also, have a common vision that, we need to strengthen our domestic capabilities, but relying also on external partners. And maybe a final point, the issue of the colors. We always have green and blue and pink. I think this is just killing us. It's killing us because it's just slowing the whole debate to move faster, to be more pragmatic. I think we are pushing for decarbonization. So all the solutions that help us to decarbonize should have a space on the market, should have a space on our policy framework. And then if we say, but renewables, we want to support them more because they have additional benefits. Let's do that by helping them more with the funding, helping them more with certain enabling elements, but have an ecosystem which allows for all the technologies to coexist in a healthy policy framework. I think is very important, and we don't have it yet today.
If you can give the industry peers with just one advice, what would it be?
Stay strong. I think motivated. I think that now we are going through a time of questioning, right? The reality check. I think the fundamentals of hydrogen have not changed. Hydrogen remains to be super important in the long term. The energy transition in Europe is going to represent 50 to 20% of our final energy demand. So this is huge. And nobody is questioning the fundamental. Politically, we still have a lot of support. But now the road is a bit harder, and I think we need to keep on innovating, keep on pushing the press through the final gate, and not lose the hope because there is a lot of good things to come.